Now, our next presenter is incredibly passionate about real estate. You might say that he loves it so much, he actually bought the company, because that's the truth. He founded Mogul Realty Group and to create an environment for exceptional real estate agents, exceptional real estate services, and part of that service is educating you. So now, with more information for you tonight, ladies and Zoomers, welcome James Knull.
Everybody just clapped, but I was on mute, so you all missed it. Sorry. But we have a live studio audience today, and it's super exciting. Woo! It's the first, I know. Oh, man, it's the first time we've been heading in the right direction from COVID instead of the wrong direction. So I personally am super, super stoked on it. So what are we talking about this month at Mogul Mastermind? Well, we're talking about bookkeeping. We're talking about accounting. It's that time of year. We're thinking tax. We've also got a really talented speaker coming to talk about one of the most tax efficient strategies on the planet. That's my teaser. You guys are going to have to wait until Dan comes on and talks. But what I'm going to talk about is I'm going to be talking about accounting and bookkeeping from the perspective of a real estate investor. So we wanted to do something a little bit different this year. In the years past, we've had a bookkeeper come and talk about bookkeeping. Then we had an accountant come and talk about accounting. And as we know, bookkeepers and accountants are very cautious in the way they explain accounting and bookkeeping concepts. So I figured I'd just do something a little bit different and kind of tell it like it is. So we're going to have two distinct presentations today. The first thing I'm going to talk about is bookkeeping for real estate investors. And then the next thing I'm going to talk about a little bit later is accounting for real estate investors. So I'm going to be answering a lot of the questions that everybody asks all the time, and I'll get a little bit more to the point with the answer to those questions instead of kind of giving the neutral accountancy answers. So we're going to get a little bit more focused on how to run your business as a real estate investor and giving you guys some of the practical tips that you're going to need to be able to, do your stuff. So let's get into it. Get my screen share going here. Alrighty. And screen sharing. Okay. And I'm just getting into presentation mode. There we go. All right. So bookkeeping for real estate investors. So we know this is often the most daunting and scary and mind-melting task for real estate investors. For some reason or another, most people don't like doing their bookkeeping. They procrastinate on it. They leave it till the last minute. They're doing it right before tax time. You've got a wallet stuffed with receipts from Home Depot. You've got a shoebox full of invoices. Or even worse, all of them have gone missing because you didn't take the time to record them properly. So I get it. And the reason I get it is because I have been guilty of just that myself. At many points have I procrastinated on bookkeeping. And just like any procrastination, you're only just hurting yourself when you do it. So I can't promise that I'm going to make bookkeeping a breeze, but I'm going to at least provide a very, very simple system. We got Alexis on the social media game looking strong over here. There we go, right over there. Doing it for the gram, baby. Hashtag real estate investing, hashtag Mogul. Make sure you tag us. Thank you very much. Anyways, so I can't promise that I'll make real estate painless, but I'll make it as straightforward as humanly possible for you guys. So with a couple of simple tools and a couple of simple practices, hopefully I'm showing you guys how to do it yourself. So you probably hear over and over and over again, and even probably in the chat window, people say, bookkeeping was the first thing I hired out, or, oh, just hire a bookkeeper. That's true. And I have a bookkeeper now, but I can tell you, it's really hard to just quote unquote hire a bookkeeper if you don't at least understand the basics of bookkeeping in general. So I would recommend at least put a little bit of effort into learning how to do it yourself, because it'll make you a much better client of your bookkeeper, and it will save you, I wouldn't even say hundreds, but probably thousands of dollars of paying your bookkeeper if you just have a bit of a smoother setup. Now, it's easy to say, just hire a bookkeeper. But good bookkeepers start at nowadays 30, 40 bucks an hour. If you've got a bookkeeper with management, certified management accountant experience, we're looking at closer to 70, 80, $90 an hour. That's a bookkeeper. The accountant's going to charge you 300, 400 bucks an hour. That's a whole other story. So you don't necessarily want to be paying that kind of money when you're early on in your real estate investing career. So there's a lot of merits to learning how to do it yourself. Number one, you're going to save a little bit of money. That's great. We're investors. We're here to drive more profit to the bottom line. Number two, I would implore you to learn how to bookkeep so that you can be a better client for your bookkeeper. So that's what we're going to talk about. This is the do-it-yourself session for bookkeeping for real estate investors. So we're going to get into it. I'm going to give you guys a simple system. Now, before I get too deep into it, I want to give a shout out. Now, I don't think he's here today, but I still want to give him a much deserved shout out. Hit me up in the chat window if you guys remember the name Russell Westcott, one of the old school real estate investor guys from Rain. So if you remember Russell, give him a much deserved shout out in the chat window. Why am I giving Russell a shout out? For those of you guys that are old school Rain members, you are going to remember that back in the day, Russell did a presentation at what used to be called Quick Start and then Acres, called the Power Paperwork System. And the Power Paperwork System was fantastic. It was a very, very effective way to manage your files. Now, the shortcoming that it had is when that presentation was designed in the year 2005, it was all based around paper files. Well, the year is now 2021, and we want to be paperless. So really, a lot of what I'm talking about is going to be the evolution of Russell's Power Paperwork System, and it's going to be explaining how to do it paperless, because paper is no fun. So shout out to Russell for being an organized son of a gun and teaching me a thing or two about keeping my files in check, because that's going to inform a little bit of what we're going to talk about today. Okay, so finally, the disclaimer. I am not a bookkeeper. I am not an accountant. I can't give you bookkeeping or accounting advice, nor can I act as a fiduciary in either of those capabilities. So I am giving you my one man's opinion on how to bookkeep, not advice. So don't sue me. You know what I'm saying? So let's talk about records and files. So old school bookkeeping involved paper. Paper. You got till receipts. You're printing out invoices. You've got paper invoices. That's just really not going to cut it in the year 2021 for a couple of reasons. Number one, we all know that we're going to own these properties for a while. We also know that we're going to have a long-standing record of accounting. So if you start accumulating paper at the beginning of your real estate investing career, one banker's box for 2021, two banker's boxes for 2022. Let's say your portfolio grows and now you have actually two banker's boxes for 2023. Before you know it, you're literally going to have an entire closet of your house dedicated to paper files. I mean, no joke, it can be a fire hazard, but secondarily, it makes it incredibly difficult to navigate. So if there's a piece of information that you need for whatever reason from 5, 6, 7 years ago, you're digging through a dusty old box, picking through the paper. Ideally, those paper files were incredibly organized, but it also takes way more work to manage paper files because you're physically moving things around and opening files and cramming stuff into it, and flattening out receipts and stapling things, and either using an old school label maker to make labels for your files if you're super OCD / have terrible handwriting like me, or you're getting out your Sharpie and writing very carefully on your files the names of everything. Then you want to be organized by month. So you have now an envelope for every month. It creates a lot of mass, it creates a lot of volume, and it does not save you time to be chasing physical paper around. So the first thing we're going to get into is I'm going to show you guys a very, very simple way to maintain your records. And I'm going to show you what I would consider to be a very bookkeeper friendly way to maintain these files. So in our folder, you'll have each folder labeled by property address. Great, no problem. Then when you click on that property address, we have a folder for each year. And then in that year, we have each of the months. So each of these months, as I was saying, is labeled with 01 through 12. The reason for that is so that they go in the right order chronologically. The next thing that we want to see is within each folder, have a file naming system for each of your receipts. So let's hop into February. So you can see right here, again, I want to put the date stamp on everything because your bookkeeper is going to cross-reference your bank account statement against the actual invoices that you have paid. So that's super, super important to actually be able to do that. So that's step one, is get your folders set up and have a file naming system. Now, the next thing I would recommend is going month, then day, then year. Because the way that your file folders will pick up on the file name is the first number will index first, the second number will index second. So that way, if you have multiple months in one folder, they'll still appear in chronological order. Again, this sounds like silly little nitpicky stuff, but it will make your life a million times easier because it allows you to index and search all of your files chronologically. So super simple. Now, a couple of other tips. One thing that you can do is if you have an invoice in the form of an email. So I'm just going to open my inbox here. This is a showing notification for one of the properties that we have listed. But watch what I'm about to do. If you go File, Print, right here is our printer. But if you use the drop-down menu, you can go Microsoft Print to PDF. Now, instead of printing a piece of paper, it's going to save that file as a PDF. So let's pretend for a second that I want to save this particular file. Okay, I'm already in my property folder. So today is February 27th. So I'm going to go 02.17.2021 - miscellaneous receipt. Great. Now it's saved, it's dated, it's indexed. And instead of being old school and printing an email and then cramming it into an envelope, I've just turned that email into a PDF that is now part of my folder. Perfect. You can do the same thing with your physical paper receipts. So whether you're scanning them to a PDF or there are plenty of apps that you can download where you snap a picture, it turns it into a PDF, it emails it to yourself, and then you just take it out of your email, plop it into the folder. So this is the ultimate way to do your bookkeeping. You have it in a share folder that's shared with your bookkeeper, and then everything is a PDF that is date stamped. Super, super critical. What I like to do is in that folder, when you go to your online banking, you want to take the bank account statement for that month. So you want to be getting your e-statements and you just plop it right into the month that it applies to. So let's get back to the presentation for a second. I'm not going to mess with this too much more. But next is your income. So we've tracked our records in our files. Now we want to talk about tracking our income. So when it comes to tracking income, I would hope that at this point, each of you is collecting your rent through email money transfer. If you are still toting around old school paper checks, give yourself a little slap on the wrist. Because in this day and age, it's super easy for your tenants to be sending you e-transfers. So what you want to do is take that e-transfer. I just took a sample e-transfer from this month. And just like everything else, I literally went into, so this is just an e-transfer that I received for a little rent for a small suite, $975. He sent me the rent. I literally just took the email money transfer, did that same print to PDF, saved it in the folder. The reason that I want to have a supporting document for every single transaction that happens in the bank account that's for that property logged as a PDF. The final thing that you want to do is for your invoices. So this right here is an invoice that I had for Handyman Connection for a small odd job at one of my houses. So you can see we've got the invoice. They sent it to me. What did I do with the invoice? I paid it with an email money transfer. So what I did is I took the email money transfer and I printed the confirmation of that sent money. The reason it's so important to print that confirmation is because on the bank statement, the only thing that's going to show up on your electronic bank statement is something that says e-trans or e-transfer. So it's easy to remember that is a month from now, but a year from now, a year and a half from now, if you have a bookkeeper that's going through your bank statement for you, if you have like 20 properties on the go, you're not going to know what an e-transfer was for. And now, instead of just having that e-transfer coupled with the invoice that it paid, you're going to have this horrible chase around where you're going to be going through all of your files, trying to figure out, what did I pay $157 for? Because you can see right here, all it's going to say is e-transfer, 157 bucks. That doesn't do you any good. So you can see when I send that e-transfer, I send it from the right bank account for that property. I've got the amount, we've got the recipient, and then in the message, I write the invoice that it was for. So again, this all seems very precise because it needs to be. The crazy thing about bookkeeping is if you don't have your records labeled properly, a few months from now, everything is just going to get super confusing. And that confusion is what makes bookkeeping such a daunting task for most people. Because if you're going through bank statements and you have e-transfer 157, random receipt for this from Home Depot, and you don't remember what it was for, you're going through your deleted items in your email trying to track down invoices. It just becomes an absolute nightmare. The time it takes to quite simply just save PDFs and date stamp them in your folder takes no time at all. It's very, very simple, easy to stay proactive with it. So that's step one, is just have your folders set up and make sure you are date stamping everything you put in the folder and labeling it appropriately. Also super key, for every invoice, also have the record of e-transfer when you email money transfer that invoice. Now, if you pay it with your credit card, then that provider is going to send you a paid credit card invoice. Either way, you want the history of payment to match the actual invoice. Super critical. So let's get into, so we've talked about records and files, we've talked about tracking your income. Let's talk about bank accounts. So the bank account situation, in my opinion, can create a ton of problems for you if you do not have a separate bank account for every property. It makes it so much neater, easier, and simpler to track if you have one bank account per property. So that's what you want to be doing. Every property you own should have its own unique bank account. And then the insurance for that property flows in and out of that one bank account. The mortgage for that property flows in and out of that bank account. The rent, the insurance, the property tax, all expenses, everything is under one nice, neat little umbrella so that when you have a bank statement, it makes it easier to do that backtracking. Again, some of these tips are for how to make it easier on yourself, but making it easier on yourself also makes you a better client for your bookkeeper. So, for example, do you really want to be paying your bookkeeper $75 an hour to try to reconcile 20 different properties to try to figure out what $157 e-transfer was for? Or do you want them to be able to go click folder, zip, zip, there it is, accounted for, bing, bang, boom, done. It saves you tons of your own time, or it's going to save you a ton of your own money by not having to pay a bookkeeper. So bank accounts, very simple point, but you want one bank account per property. And then in that property folder for the corresponding month, you want to save your electronic bank statement. So always be on electronic statements. Again, we're trying to go paperless here. You don't want to be getting a paper statement in snail mail that you then have to scan. No, the year's 2021. That's not how we're doing this. Next, we're going to get into the actual bookkeeping tracking. So this is going to be specifically for rental income properties. There's a form called Form T776. That's a form that goes into your tax filing. So this is for the do-it-yourselfers. If you submit this to your accountant, the accountant is going to prep a form T776 for you. But again, you don't want to pay an accountant $300, $400, $500 an hour to decipher your jibber-jabbery tracking system into a form T776. You want to present your accountant with a nice, crisp, clean statement for that property that they can then easily transfer into form T776. So I'm going to share with you the silver bullet here. This is a very user-friendly, easy-to-use spreadsheet that you can use, have one spreadsheet per property, and then what you do is you transcribe the information from your record of transactions into this spreadsheet. So I'm going to get into the spreadsheet. I'm going to show you guys how it works. And again, it doesn't get much easier than this. So if the idea of using QuickBooks or any other accounting program is daunting, you know, if you're old school and you want to keep it simple, there is no simpler way to do your bookkeeping than this spreadsheet. So page 1 of the spreadsheet, this is the summary. Everything here auto-calculates. So this is what you want to hand to your accountant. You don't need to send your accountant this whole big convoluted workbook. You just need to send them this one summary page. Now, you put your name here, address here, the tax year right there, and then it also does joint ventures. So if you have a 50-50 joint venture, you just put in 50%, and then it divides everything in half, because when it's a joint venture, you file for your 50% of the profit and loss, they file for their 50%. So it allows you to do that as well. Assuming the property you own it yourself, it's 100%. And so then we just track each individual item in the spreadsheet. Again, super simple for each property. It shouldn't be more than about a 5-minute exercise once per month if you're just making sure you keep your file in order. So income, that's quite simply the rent. So it's also set up for a suited house and if you do separate garage rental. So it's just gonna calculate your rent out. You just put in the rent every single month. Ideally, the rent's gonna stay the same. So this is a pretty easy one. Advertising. So again, if you're the do-it-yourselfer and you're not paying a property manager, this is where you put in the cost for your advertising. So let's say that we pay $40 on, February 20th for a Kijiji ad. Great. Kijiji is going to email you that receipt. You're going to use the print to PDF. You're going to store that PDF in the file. It's going to get date stamped. There it is. You put in your insurance. Again, this one's a freebie. Your insurance payment every month is the same. Or if you pay your insurance annually, then just put in the year for the annual total. Interest. So this works on 2 fronts. It allows you to put in your mortgage payment here. And then if you've borrowed a HELOC for the down payment, it also allows you to put the HELOC interest in right here. Now, if you want to make it even easier, you can just put in the amount that you borrowed with the HELOC here. So say you have an $80,000 line of credit. And then every month as the interest rate fluctuates, you just put in the interest rate and it'll calculate what your HELOC payment should have been. I prefer just manually putting in from your HELOC statement what the amount of money was for that particular property. However, if, for example, you have a $400,000 line of credit and you break that into 5 down payments of $80,000 each, well, okay, so you want to put in how much applied to this specific property and then the prime rate, because it's not going to be $80,000. It might be a very specific amount for a property. Like at $350,000, it's not a nice round number. Now, here is a very, very important part of this whole shebang. You can only write off the interest. You cannot write off the principal of your mortgage payment. And we know a mortgage payment is blended interest plus principal. So you put in all of your mortgage statements here. It's going to give you a subtotal. The subtotal of the HELOC interest is here. But in this slot right there, you can only put the interest portion of your mortgage. So when you get the year-end statement from your mortgage company telling you how much principal and interest you paid, take the interest off your year-end mortgage statement, put it in right here. All of these expenses that I'm showing you automatically import into this page, making it very, very easy to just calculate your annual net income and loss. Your accountant's going to love you if you give them this nice clean page. Next, maintenance and repairs. Again, same thing. I spent, $555 on February 20th on, plumber doing a thing. Great. And then that's cross-referenced in your folder with the invoice date stamped. Property management. If you hire a property manager, you can put in the cost of the property management fee every single month. Makes it really easy right here. If you're not using a property manager, don't use this tab. Utilities.
you put in the utilities every single month. You can either put in suite 1 or suite 2 if it's divided up by suite, or you can put in EPCOR and direct energy, for example. So you can put in your utility providers, adds up every month for the property. If the tenants pay their own utilities, again, non-issue. Property taxes, are you paying it by the month? Again, this is a freebie because it'll be the same every month. Or if you pay it once annually, you slot it in. Office expenses, if you're dedicating a portion of your home towards your office for your rental property, you can put in the portion of your home expenses here. Not very common, kind of tricky to get away with it, but that can be put in there. Legal accounting professional, well, if you are paying a bookkeeper, then they're going to put that in here. Salaries and wages, that's probably not going to be something that you're using for your rental property. And then finally, travel. So if you're keeping a mileage log, you can put the travel in here. So makes it super easy to put in everything, and then it gives you a nice, easy summary page. And then you have one bank account per property, one summary page per property, and you can hand over these summary pages to your accountant. And again, if you're filling it out in the way that I showed you guys, you just hand over the summary page to your accountant, and it'll take them minutes to fill out your entire tax filing for the year. And instead of paying thousands of dollars for your tax filing for an accountant, you're paying hundreds, which will save you a ton of money. So there's a couple of benefits of just following this very straightforward system that I've put together. Benefit number one is that if you're doing it yourself, you're going to save an unbelievable amount of time. Or number two, if you're hiring a bookkeeper, then you're going to save yourself hundreds, if not thousands of dollars of bookkeeper time and money by simply having your files tight, neatly organized, and easy to follow, because then they can just go into the shared folder and do all of the data entry for you. But the one thing that I will say is that it's almost impossible to get a bookkeeper to do the receipt management for you. So the part that you have to be on top of is just making sure that the receipts are nice and neatly put into those folders. That is, if you can take one thing away from this entire presentation, it's have a nice, neat folder, organized by year, sub-organized by month, and then just have everything in there as a PDF, nice and neat. Make sure you have the invoice and the e-transfer. If you can do that, your bookkeeping bill will go from thousands to hundreds. Your bookkeeper will love you, and this whole bookkeeping monster becomes a very easy and manageable solution, whether you have one property, 5 properties, 100 properties. Honest to goodness, if you only have one property, everything I just showed you should only take you about 1 minute every time a receipt comes in, and then about 10 minutes, maybe 5 minutes every single month. So that is do-it-yourself bookkeeping for the modern real estate investor. I hope that was helpful. Because we spent so much, can we get a copy of the spreadsheet? Well, yeah, that's the whole reason we're here. We're here to give you guys all of these great resources. So there you go. Now, because we were dealing with technical issues, we're now slightly behind. So I'm just going to hand it over to Tracy. If you have questions, direct message me, send me a private message, or let's keep question and answer going in the chat. But we got to get moving because our main man, Mr. Dan, is going to tell us how to save a boatload on tax and how to create tax sheltered growth in your portfolio. You guys want to pay attention to this next. Tracy?
That was amazing, James. Thank you so much. Yeah, absolutely incredible. I had to, it's good that you can't see off camera the papers that I moved aside for doing this meeting today. So I very much needed that. I see a few smiling faces out there too. I think a few people did. We're going to get into Dan. I just have a couple of jokes for you though first, because it's about bookkeeping. So you have to make fun of bookkeepers. How does a bookkeeper stay out of debt? He learns to act his wage. Okay, I've got one more and then we'll go into Dan. Why are accountants good lovers? So this goes well with Valentine's Day that we just had, because they're great with figures. All right, that's it. So now we have some great information for you.